What is going on, investors? Back again. Another high-flying stock, one of these speculative stocks that a lot of people are excited about is Beyond Meat, ticker symbol BYND. We see in the regular session, this stock was up solid, almost about 6%, and it gave it most of it, all of it back, actually, and a little bit more in the after-hour session after reporting earnings. So they reported their second quarter earnings. I've got them here. We'll go through them. What was interesting is I did a video on Beyond Meat a couple months ago, and I noticed that their revenues were actually starting to flatline. So we'll see if that's still the case or if they're actually increasing their revenue. We see in the 52-week range, this is a stock that swings around, man. You better like riding roller coasters if you're going to invest in a stock like this. It's been all the way down to $48, been all the way up to $181. So it's well above kind of the middle of that range. But again, we see it trading off in the after hours. It's got about an $8.8 billion market cap. This is unlike some of the other companies like Virgin Galactic and Nikola Motors, where they're kind of pre-revenue, pre-product. Beyond Meat has a product, and they're actually doing a really nice job, in my opinion, getting it out to market, getting awareness for it. So this I would take, I would still call this a very speculative stock, but at least you have far more to base that speculation on. And so Beyond Meat, in my opinion, is a company that just for my taste, I would be more interested in investing in than these pure speculation stocks. Then finally, we'll jump over to the stock chart. I think there's some interesting stuff happening here on the stock chart. We'll see if there's anywhere where we can get this stock. Now, this is the most recent quarter here. We got 3 months ended June 27, 2020. We got the previous period here, and then they give us a 6-month window here. Now, we see revenues ticked up. These are in thousands. So this is $113 million right here. That's compared very, very favorable. I mean, this is sensational growth here over the previous period of 67 million. Now, we kind of expect a company like Beyond Meat is growing pretty rapidly year over year. But what I noticed last time I did a video is they're a quarter over quarter. So just a quarter over quarter over quarter view is actually slowing a little bit. But what I noticed here is I brought up the first quarter results here. This is back in March, and they did $97 million worth of revenue. And so we actually see that it ticked up again. So I actually see that as a positive sign, at least from the top line perspective, that this company was able to grow their top line again. It was stuck in this $90 million range, $100 million range, and they actually were able to break through it actually relatively significantly here. So I would consider that a positive here in the second quarter for Beyond Meat shareholders. Gross profit, this is pretty strong. I think for a food category product, this is pretty strong. You're not expecting like software type margin or cloud computing type margins here, but this is still relatively strong and obviously compares very favorably to the previous 3 months as well. And for the 6 month, those margins hold up. So this is the type of margin I think you can expect, even though there's lots of competition and things like that. Beyond Meat is probably likely going to be able to hold these margins at least somewhere in this range. I do believe so. Now, total operating expenses are exceeded our gross profit. So that's a little bit of a problem. We see here the selling, general, and administrative expense. Look how much that went up. Okay, research and development didn't go up a whole lot. Okay, so I think they have their product. Okay, restructuring expenses went up a little bit, and a lot of companies are restructuring right now, doing different things. So we'll give them a pass here and assume that this is probably not recurring. And even so, it's such a small amount of money. But what is I wouldn't say alarming, but is causing some concern here is the selling, general, administrative expense went from 15 all the way up to 34 million. I mean, I know revenues grew quite a bit, but if we keep having this type of revenue growth and this type of selling and general administrative growth, well, we're never going to make a lot of money here. And so we see that we lost 8 million in the quarter, and we lost about 2 million in the previous period. For the 6 month, that still holds true. We lost about 3 and then lost about 6. Let's see how that compares to the first quarter. They actually, looks like they had income before taxes about 1.1 million and 1.8 million, on the net income side. So they were able to churn out a profit in the previous quarter. That turned negative here. Let's see what happened here. Selling, general, administrative was 27 just 3 months ago, and now it's 34. So they are really really laying it on thick in that selling general expenses. So to me, this is one I would keep an eye on. I think maybe this, I wouldn't say this is exactly why the stock is selling off in the after hours, but if they would have controlled this number better and kind of eked out a profit here, I think investors would be a little more excited about here. The other thing that might be weighing literally on consumers and not consumers, but investors' mind is the weighted average shares outstanding here. We notice we went from 39 million in the previous period all the way up to 62 million. That is dilution at its finest. We were actually at 65 in the previous period, so that's kind of interesting. They either retired some shares or maybe changed the class structure or something, but it actually went down a little bit. But year over year, we're up quite a bit, and we see 6 month over 6 month quite a bit. So this is, when you're in these early stage companies, again, dilution is not your friend. Dilution is, I repeat, not your friend. Does it create capital and bring money onto the balance sheet? Yes. But notice, if you had bought this stock back in June of 2019, you were if you had one share, you were one of 39 million shares. Now you're one of 62 million shares. So it's just like the Federal Reserve printing money. It's just like, any kind of dilution here. The more of it that's out there, the less valuable they occasionally tend to be. Although that's not always the case here. It's just something that you want to be mindful of. Current assets, we see our cash tick down a little bit. This is the beginning of the year. This is this year. Although, again, we're not losing a ton of money here. For the 6 month, we've lost $6 million. So this is a company that's not in any kind of financial stress like maybe a retailer and cruise ships and airlines are. So everything is fine here from this. Now, the other thing I want to point out here is inventory. I want to come back here, take a look at inventory. This is Q1. Okay, I flipped back to Q1. This is back in March. We were at 120, and now we're up at 143. And we noticed just in the beginning of the year, they were at 81. And so inventory is ticking up. Again, I'm not as maybe a big as expert on food inventory. Maybe they're building this up for a reason. This inventory is stacking up for a reason. Maybe they are anticipating demand. Maybe they got a contract coming up, but we're seeing that inventory is ticking up. That's not always a good thing. In some cases, this is showing that the company is building up supplies, but there's not enough demand on the other end of it to deliver it, because you don't necessarily want inventory sitting on your balance sheet. Especially this is actually quite a bit of inventory. I assume it's not perishable. I assume this is like work in progress type inventory, but if it's perishable, you definitely don't want this much inventory on your book. So we'll see what happens there. But to me, that's not necessarily a great thing. Combined with this really rapid increase in the SG&A costs, we're seeing this inventory tick up as well. That there could be a good reason for that. I don't want to say that I'm completely alarmed by it, but it is something that does raise some questions. From a liability perspective, everything looks pretty darn good. Looks like they paid off some long-term debt here. They do have this revolving credit facility. They opened that up, so that's kind of interesting. But other than that, everything else looks relatively clean from the balance sheet, considering they have all this cash here. They do have some inventory. If they had to burn through it, I'm sure they could. Not that they need to, but everything looks pretty good here. From a cash flow perspective, things don't look quite as good. Again, part of the dilution is coming from the share-based compensation expense. So take a look at where it was just the previous year, and now here it is. Okay, some people, they don't look at share-based compensation as cash, and that's how these cash flow statements recognize it. But guys, you got to pay your employees somehow. They're not going to work for free. Okay, so you're going to have to pay them with cash or stock. Beyond Meat is largely compensating, at least probably the executives and the kind of the higher ups at the company with stock, and so that's something you do want to keep in mind. Cash flows are still negative, very significantly negative, in fact, and most of the cash that flowed onto the balance sheet, if any, actually came from this. And so we see actually here's the IPO here. And so here's the cash that they got from the IPO. So we see it here, and they still got some cash here. They got this revolving credit facility here. So there's Beyond Meat from a financial perspective. Again, this stock sold off a little bit. It's been on a roller coaster here. You see the 1 year chart here. This stock will give you a tummy ache if you are along for the ride here. Now, what's interesting here is we were in a short-term downtrend here. We had gotten into a long-term uptrend here. It broke down. like a lot of stocks that are in the tech sector, at least, this broke down a few months ago, about 2 months ago, and it's traded down here. But what was interesting is just in the last few days, it traded up, and it could be that you had short sellers that, maybe shorted the stock somewhere up in here and got their profit and then decided to buy back in before the second quarter release. You could have had novice investors say, hey, I think second quarter is going to be great. I'm going to bid the stock up. Either way, the stock got bid up to here early in the day. Now it's traded back here. It's traded perfectly. I had this line actually in before the after hours trade. It's traded perfectly on, and now it's sitting at where we made some highs back in January, made some highs back in January here. We've made some, kind of hit against this resistance level here back just a few months ago. We've kind of hit our heads here. This 133 level, and even back in here, you can come back in here and draw the line. This 133 level, for whatever reason, 133, 135, somewhere in that range, for Beyond Meat is like a magnet for the stock. And so that's where it sits right now. And I'll let you to decide how you want to play this. I don't see like an amazing setup here with this. It did break above trend. It closed above trend. It is trending a little bit back down. This trend line now should be a little bit of support. But we're right at kind of a point where the stock has either bounced up or it's kind of hit its head and bounced down. So for me, this is like a turning point with this stock. It could chop sideways here. I don't really know which way this company is going, but at least from a financial perspective, they got revenues ticking back up. I think that's a positive. If you're long Beyond Meat, if you're excited about this company, I think that is a positive. Now, the things I would be looking for when they do their Q3 here in a few months, I would be looking at this SG&A expenses. Can they get this under control? Because this is growing way too rapidly, in my opinion. Okay, I know you got to have employees, you got expenses and stuff like that, but I think they need to control this, and then you start generating a profit. That I think would be a positive. Can you go from 113 to 118, 119, 120? I think that would be a positive as well. And then finally, I would keep an eye on this inventory number. Again, we saw this inventory number tick up a little bit. And so it went from 120 just a couple months ago. Again, beginning of the year, we were at 81. Then it went to 120, and now it's at 143. Why is this inventory ticking up a little bit? Maybe in the conference call, they address that. Maybe you can dig into it a little bit more and figure that out. But to me, it's not really drawing some red flags, but I do have some questions about that inventory. Those are some questions I would ask. We see this stock selling off pretty nicely here in the after hours. It's not one that I really want to jump in here, and I just don't really have any need to have a pure play. Now, if it got back down in here, back down the $70 range, 70, maybe even $60 range, this is one that could be a pure speculation at that point. But, Beyond Meat, it's a speculative stock. It's $8.8 billion valuation. That's probably a little hefty based on their revenues and certainly hefty based on their profits and stuff like that. But it does have a product. It does have potential here, and they are doing a good job growing revenues again. And I think they have a go-get-em type management. So this is one where I think you just want to be careful with your allocation on this. If you're a young investor, I've seen a lot of comments on my videos where people are like, I have a significant portion of Nikola Motors. I'm heavily invested in Virgin Galactic. I'm heavily invested in a stock that has no revenue, no product, no profits. Okay, Beyond Meat, I put it in a step above a category of those like pure, like kind of hopes and dream kind of story stocks. This is a stock that is executing, but I would keep your allocation tight on this. If you have $1,000 portfolio, I wouldn't have more than one share of Beyond Meat. If you have a $10,000 portfolio, you can kind of scale it up from there and see what I'm talking about here. This is still a speculative stock. We're in a roaring bull market. Stocks like Amazon, Facebook, Google, Netflix, Alphabet, Microsoft, these stocks are going higher and higher and higher. And you want to throw in the NVIDIAs and the AMDs and some other stocks in there. These stocks are going higher and higher and higher with clockwork. I don't see a huge reason why you need to really be fully and heavily invested in these speculative stocks. Do you want exposure to them? Sure, but should you be overweight and over allocated to a stock that goes up 6% in the regular trade and then trades off 7% in the after hours? Probably not. I think that's probably a little too much volatility based on how much these markets have just been trending up for nearly, actually over a decade now. So there we go. There's Beyond Meat. Didn't look as bad as last quarter, actually. So I think there's actually some positive signs here. It's still just a little rich valuation for my taste. I'll let you decide if it is for you. So there we go. That's Beyond Meat. We'll be back again very soon with another video. Hopefully you guys are all doing well out there. Good luck with your investments.